Hello and welcome back to London, where it's a sweltering 30 degrees and it's been like this for one whole week now. So is the UK economy showing signs of heating up as well? Well, I've been speaking to James Hughes from Alpari about the UK economy and also the sterling, which has just hit a 4-week high against the US dollar. We've just seen the cable hit a 4-week high, well, at least the pound hit a 4-week high against the US dollar. What exactly is driving the sterling at the moment? Is it just a case that it's looking slightly less ugly than some of the other currencies out there at the moment?
Yeah, I think that's been the story for quite a long time, actually. You've got a lot of currencies which aren't necessarily performing amazingly well. You've got the dollar, which is, of course, pegging the majority of them, which economically we don't know which way is going with all the tapering talks. We're 1 week we're one way, 1 week we're the other. So in terms of the pound, it's almost been the case of, OK, we've had some more concrete news with the Bank of England minutes last week and the way Mark Carney's first meeting went. That has given us a little bit more stability in terms of what the pound's doing. So that's, I mean, some of the major reasons we've been a little bit more static when it comes to the pound rather than some of the others. I mean, some of the others we've seen some real choppy times. We've seen some volatility, which no one's really been able to put their finger on why that's there. At least with the pound now, we can look towards tapering on one side of the Atlantic, and this side with the Bank of England meetings and Mark Carney coming in, you've got some real proper news flow which we can get our teeth into to actually put down to why this market's moving.
Well, what is the expectations for Carney? Before he came, or at least 6 months before he came, everyone was saying he was going to come in and blast more QE into the system and he was going to solve all the problems. Now everyone's much more cautious. So what do you think the markets are expecting?
Well, I think that initial talk was we was always going to get that kind of big thunderous entrance that everyone wanted to see, and we got that to a certain degree, but by him doing the exact opposite of what we all thought. And I think one of the key things had been Mervyn King had been voting within the minutes to continue QE and add more QE into the system. Now, when Mark Carney's gone in, he's not only not voted for that himself, but he's got the others that were voting for that to come back to his way of thinking, which is a case of no QE, extended low interest rates for a longer period of time, and to almost ride this out a little bit. And I think that's almost the view, that the economy is not performing necessarily badly, but it's not necessarily performing well. So we're in that area of stagnation, but he doesn't see that we need stimulus to really boost things to the upside. Of course, we've got GDP figures this week will give us a little bit of an insight into what's going to happen with that. But I think it's almost a case of stability is better than the injections of cash. But I wouldn't be surprised, even at the moment, we may not be able to see QE, but there's potential that a few people are talking about now is the fact that we could see a further rate cut from the UK. But again, I think it's more stability at the moment than an influx of stimulus or rate cuts to keep things going.
Yeah, let's move on to that GDP release on Thursday. I've been reading some forecasts, some as high as a whopping 0.6%, which compared to other countries in the Eurozone is very positive. Do you think 0.6% is a realistic amount?
Not necessarily, to be perfectly honest. I mean, I think the way we've been reading these GDP figures recently, we've been massively disappointed by expecting big figures, and of course, with big figures we say 0.6%, but bigger figures than what has been there. And I think it's 0.3, somewhere around those sort of levels. Granted, it's only 0.3 percentage points away from what they're saying, but still, in the grand scheme of things, is quite a lot. I mean, you have to look to the way these markets, the economy is moving. Food prices are at incredibly high levels. There's this inflation problems that we've had. I mean, people's income has struggled. I mean, from a GDP point of view, that doesn't necessarily bode well. The unemployment is stagnating. We're not moving in a negative way, but we're not moving in a positive way quick enough to justify a 0.6 GDP gain.
Yep. So what are the issues with the UK economy? Because we're always told that Europe and the Eurozone is a very important destination for the UK in terms of exports, and there's nothing really picking up there. So where is the growth going to come from in the UK? Is it just a case that we're going to go back to this housing bubble and also being very reliant on credit?
Well, the housing bubble is a key point, because of course we've seen these house prices start to go up pretty rapidly, to be perfectly honest. And I think quite a lot of people have been worried that we're heading towards that housing bubble. Now that's real early indications of these house prices going up, but they have jumped when they have gone in a positive way. They've jumped pretty aggressively, and I think that's going to be a worry of seeing another housing price bubble. I think we're moving in that direction. I don't necessarily see us continuing with those for an extended period of time, but of course it's where else you look for that growth. As we've said, the growth figures that we're talking about, okay, 0.6%, 0.3%, compared to the rest of Europe is a fairly good number, but I mean, in the grand scheme of things, it's not huge. It's not huge growth. So you say, where's the growth coming from? I mean, I think the answer to that is the growth isn't coming from necessarily anywhere, but the negativity isn't coming from anywhere either. And I think it's almost a case now that Mark Carney and the Bank of England and the government are happy to see that things aren't getting worse. We're almost jumping back a year, 18 months or so to a point where all we wanted was growth, all we wanted to see was GDP growth and the economy performing better and not being in triple dip recessions. Now we haven't got those statistical things to worry about. It's almost a case of, well, we can quite happily cope with a stagnant GDP growth while things continue to get better elsewhere. But I mean, I think the housing point is one point where we're going to see it, but it is a worry that will go a little bit too quickly. Yeah,
just to finish off, bring it back to the currencies, so how are you expecting the cable to move over the coming months and also against the euro?
I mean, I think against the dollar to start off with, we are seeing potential caps at around 153 or so. We break through it, but we can't necessarily ever hold anything too far above that. But then when you break that down a little bit shorter term, we're seeing real strong sort of trending movements in the pound. So I think in terms of the dollar, there is a degree of positivity to come there, but I think 153 is always going to be this issue. I don't ever see us flying too far past it. And again, with the mixed news when it comes to tapering in the US, you're going to get that toing and froing there. In terms of the euro, again, I mean, we're looking at the pound being stronger than the euro. We're looking at that again. That's two of the ugly sisters that are fighting against each other at the moment. So you can't. It's hard to gauge either way. If we were looking to an influx of stimulus into the pound and looking at Mark Carney voting the same way that Mervyn King had been, we'd probably be looking at a different story. But in terms of euro sterling, I think that's one currency pair which will fight each other to the death with both sides of negative and positive news flow, really not necessarily making it go too far, to be perfectly honest.
Well, James Hughes from Alpari with some really excellent analysis there. Stay tuned to Dukascopy TV for more interviews, but for now, goodbye.